Hello, CoinW family. Let's start. We have all the panelists here. Let's start. It's great to see you all again, and welcome to another session of Neo Talks. Before we jump into today's discussion, I want to give a quick shout out to our partner, NeoWave Academy. NeoWave Academy is an online platform that helps traders, investors, and any curious people about learning crypto, more about trading and the world of Web3. If you ever have any questions about crypto, make sure to check them out and give them a follow. Let's get started. Uh, as you see, Bitcoin hit a all-time high this week. Bitcoin is currently trading at around 108K US. Um, but most of the people in the city you see, they say this is not just about Bitcoin prices going up. There's a lot of other things happening behind the scenes. In the US, the government is having a tough time finding enough buyers for its own growing debt. And at the same time, crypto is getting hotter than ever. And a new law called the Genius Act just passed, finally giving stablecoins some clear rules. Because of this, we are seeing a lot of money moving quickly into Bitcoin. It was like 88K a couple of weeks ago, and if you see now, it's almost saturating around 198, 110K. Um, Bitcoin and Ethereum and other cryptocurrencies are following as well. Some people are even saying that crypto is not just an alternative anymore. It will become a mainstream investment for the banks, funds, and governments too. And crypto is making money move faster around the world. Um, so, are we really seeing a big change in how money flows globally, or is this just a temporary moment before the things settle down? In today's AMA, we will talk about questions like, can crypto become America's next global export, or is this just calm before the storm? I warmly welcome our panelists today, Lisa from Metia Community, Rebecca, Chainting Ambassador, Julie, Core Community Contributor of Degent AI, Tuna, RWABD, and Jumpster Panda, Match ID Ambassador. I welcome everyone, and let's dive in and explore what's really going on through our AMA today. Okay, my first question is about US debt. As the US issues more debt and fewer people seem interested in buying it, do you really think crypto could start acting as a kind of pressure release for these debt problems? Is it realistic to think that money which used to go into government bonds might start flowing into digital assets like Bitcoin and Ethereum instead? Yeah, let's start with Julie from Core Community. Julie, a quick introduction about yourself and you can proceed with the answer. Thanks.
Okay, thank you. Yeah, I actually think that this is a already starting to happen. The U.S. is printing debt like crazy, over $1 trillion in just a few months, and the euro buyers, countries like China and Japan, they are not as interested anymore. Even U.S. banks aren't buying as much. So now there is massive hole in demand. And at the same time, inflation is still around and real yields don't look that great. So if you're an investor, especially in a global one, you start asking, where else can I put my money? And that's where crypto comes in. And Bitcoins in particular, it doesn't rely on government. It has a flat fixed supply, and you can hold it to yourself. And some people even call it a digital bond now, not because it pays interest, but because it's something you can park your value in long term. And I'm not saying crypto is going to fully replace the bond market. That's a $100 trillion space, but it doesn't have to. Even a small shift like 1% of that crypto moving to Bitcoin or stable coins would be massive. And we're already seeing the science of this, and just look at how much money is flowing to the new Bitcoin ETFs. These are not retail diligence. This is serious institutional money looking for an alternative. So yeah, I think more capital will start flowing into crypto, not just for returns, but as a way to escape the risks building up in the traditional financial system. And it wouldn't happen overnight, but it's happening. And so that's all my thoughts for that. Back to you.
Thanks, Julie. That's a quite insightful answer. How about you, Elsa? What's your take on this?
Great. Before jumping in the question, I'm just gonna give a quick intro of myself. I'm Elsa from Matya. So Matya is a Web3 version of Tinder. It's a bold new frontier where dating, identity, AI, everything, finance converge, and we are bringing the whole Web3 social platform that combines AI powered companionship, blockchain based identity, and also tokenized rewards all under one seamless ecosystem, which is Mayer. And we're also proud to announce our we officially list on XT Gate, Lbank, and just more gonna come soon. So just don't forget to follow us, and thanks Counterbill for having us. So as for the question, I think that's brilliant. So imagine we are sitting at a table with the world's biggest capital allocators, so range funds, pensions, elite family office. So for decades, they're treated U.S. treasures as the gold standard, safe, liquid, and untouchable. But now the room's starting to shift. America is issuing these record levels of debts, but the thing is, traditional buyers, Japan, China, they're not buying anymore. Even US banks, they are backing away. So the demand just isn't keeping peace, and here's and where is getting wide, like rather than like absorbing then the excess capital. I think the bond market is leaking confidence. So rates are rising, but not because the economics booming, but also because the treasury is oversupplying and under demanded. So now they step into the crypto arena. Bitcoin, Ethereum, they are no longer fringe. They are kind of bo- borderless and unlike treasures. They are not tied to any government that's printing itself into a corner. And instead of high net worth individuals and institutional allocators are starting to look at crypto not just as a hedge, but as a new kind of sovereign asset, one not issued by a nation but by code. So yes, I think in that light, yes, crypto is becoming a relief value for world awash a in untrusted fire. And we're not saying digital access replace treasures overnight, but capital is definitely hungry for new stuff. And for a certain class of global capital, this great high tier forward looking Bitcoin is starting to look like the news with world quietly, steadily, and money is exciting that the old guard and finding a new home. So is it realistic? Maybe it's already happening. Thanks.
Yeah, that's a unique take, Elsa. I appreciate it. Your perspective is very different, and yeah, the money which is bound around has to be into some other entity. So that has to be maybe crypto in the future. Thanks for that, Elsa. So the same question, I'll pass it to you, James.
Hi, hello everyone. This is James the Panda. I'm the ambassador of Match ID, and by the way, before the introduction of the Match ID, I just want to pass message to Alisa, right? Uh, uh, I think like maybe pass information to everyone in this AMA because Match ID is currently having a constant Odyssey session like weeks by weeks, and we are organized different partners and have this Odyssey and users like our last round just finished, and we got 60K users participated. So I would love to invite everyone here to like join us for the next round if that is also what you are looking for. Yeah, now by the way, the Match ID is the decentralized identity system. We onboard users from web 2 and both web 3. Match ID has collaborated with many tickets system, for example, and other systems from web 2, and trying to onboard more like non-web 3 users. And also we interact with web 3 as much as we can. Yeah, but that's it. So back to the question. That's if crypto really helps soak up the US debt like a relief value, right? But before I answer this question, I would just briefly give my conclusion. I would say no for this answer for this question. Why? So let's think of U.S. treasuries as a giant water tank of the government fails every time it needs cash, right? Right now, like that tank getting overflowed, too many bills being issued and not quite enough buyers, right? Uh, I guess that's also the purpose of this giant act, because they got too much pressures from this, and if we wonder, like if crypto would, be a second bucket under this leak. The thing is like we need to look at the data. So for the US bond tank holders, there are over like 40 trillion, and the crypto market, like the total crypto market is only like 3 trillion, right? And for stables it's even lower, it's like zero point 0.2 trillion, over zero point 0.2 trillion of the stables. So if you the giant act is trying to use this zero point 0.2 trillion and to solve this 40 trillion problem. I think that's like too far away from what they wanted. I mean, if even like the crypto market could grow very fast in the next 4 years when Trump is uh, making so much drama in the market, right? Even though I think that won't be won't be a match if we look at it. And I also have to had a talk with the traditional U.S. finance market experts, like when this act is released, and they also think it's not something will change their the bond market or even the share market. So yeah, that was a reason I just uh, want to express based on the data. Thank you. Back to you.
Thanks for breaking that down for us, Jamster Panda. That's a valuable point you have added. Thanks. So let's move on to the next question. So this question is, yeah, you might be knowing that Genius Act has been passed. So the stable coins are entering a new era of legal clarity and institutional adoption. Will this act reshape the competitive landscape of stablecoin issuers? Yeah, this question is for you, Elisa, please.
Great question. So, and the short answer is yes, and we are definitely entering a whole new era for stablecoins. So, let's break it down with what's really happening behind these scenes. I think the Genius Act just passed, and it's not just another bill. It's the first time the US has drawn a clear legal line in the sand around stablecoins. So, for years, institutions have been sitting on the sidelines not because they didn't see the value in stable coins, but because the regulator fog was too thick. Now the fog is lifting. So, like take PayPal for example, they launched their own stablecoin PYUSD, but adoption's been cautious. Why? Because until now, no one really knew how regulators would respond. But with the Genius Act in place, you can already feel that the tune shift. Expect companies like PayPal, Stripe, and even traditional banks to go full forward. So not just using stable coins, but they are issuing their own. So and it's not just the US reacting. Right now, Tactor and Circle, the current giants in the space, are now facing pressures not just from each other, but from deep pocket regulated entrants and who can now compete with all those legal certainty. They reshape their playing field entirely. It's not just a race to mean the most right anymore. It's a race to become that the most trusted, most compliant, and most integrated game. So yes, I think the Genie X is a game changer. It signals to Wall Street and even Silicon Valley alike. Stablecoins are here to stay, and now they have to a legal lane to scale. And we are likely to looking at the start of a US-led stablecoin ecosystem that is no longer just competitive. It is a whole new institutional grade right now. And thank you.
Thanks for that aspect, Elsa. Yeah, USDC Circle, the big institutions were planning to buy the stablecoin issuer. Yeah, and the lure is going on. It's a wait and watch for now. Thanks for that. And same question to you, Gemster Panda. What do you think about Genius Act being passed?
Sure. Yeah. Yeah. For this question, I would totally agree with Alisa. Like even like for the last question, right? I don't think the stable market will be a value relief for bonds, but the back to the stable coins, it's a totally good thing for it. So at least it's getting a clear like rule book, right? Um, so the big banks and funds have been sitting on the sidelines and worried they might break the law before, and now like they know exactly how to play the rules, and like treasuries in reserves, regular audits, no funny business and things like that. So the big players will be sit on the table and drawing the play this time. And for the next thing is the um try to image like the traditional banks and money market funds, even like our retirement plans, while starting to use stables. That will be a big game changer for in the future. So I would be really like expecting what's gonna happen next. But the answer is positive. Thank you, host. Back to you.
Thank you. Yeah, that was a good example. People can understand that stablecoins make a lot of difference for money value transfer in the future. Okay, let me shoot out the third question today. It's about the Fed rate cuts. Okay, and the Fed hasn't cut the rates yet, but the markets are already pricing in a pivot. To what extent is this macro optimism fueling Bitcoin and Ethereum's rally? Are we in the early stages of a liquidity-driven bull market, or is it just another day of news running the rally? This question, let me start with you, Julie. Please proceed.
Okay, thank you. And before that, I remember that I have not shared a short intro about ourselves, like what is the agent AI. So please give me a second to share our short intro. And we are the largest AI agent infrastructure on BTC and BSC equal, and we could deploy all kinds of AI models in different scenarios, which could realize self-decision and implementation. And also we have our own open source framework in the near futures. We could have developers to deploy their own AI agents. And and for our main product, our first AI agent, which name is ElfX, which could predict the price for BTC and ETH in the future 2 to 72 hours. And the accuracy rate is about 70%, which is much more higher than a traditional trader. And that's the short intro about ourselves. And if you want to know more, please dive into our official Twitter account and our community to get more news about us. And as for this question, okay, here's how I see it, and totally, and you can feel it's in the air, and the market wants the pivot, even though the Fed hasn't officially cut yet. Traders have already moved on and features pricing in cuts starting as early as September, and risk assets acting like the money printer is already warming up. And look at the Nasdaq and look at the gold, and of course look at crypto. Bitcoin broke 8H before any rate cut actually happened, and that tells us this is narrative driven, liquidity anticipation driven. And for Ethereum, it's been relying off the backup ETF approval bus too, which just adds more fuels. And yeah, I think we are still in the early stage, and there is a huge amount of sidelined capital, and both institutional and retail, and that's waiting for confirmation. Once the Fed does officially pivot, that's probably when floodgates open, and it's kind of like a coiled spring right now. But one thing to keep in mind, and this is also mean the rally is fragile. Inflation data spikes again, or the Fed turns hawkish, and the market could wobble. So it's bullish, yes, but it's still macro sensitive, short term optimism. But for long term, that depends on how fast the liquidity truly turns, and whether we get real economic slowdown or not. And so that's the short version from me. And back to you.
Yeah, thank you. That was a solid explanation. I do appreciate it, Julie. I'll pass the same question to you, Rebecca. So, your comments on Fed rate cuts.
Hello, thank you for hosting this. And I'm Rebecca from TrendThink. We are a next-gen crypto media platform focused on cutting-edge trend analysis and breaking industry news. For collaboration opportunities, feel free to DM our official Twitter accounts. And my take on this question is, honestly, the Fed hasn't even cut rates yet, but the market's already pricing it, and crypto's loving it. Bitcoin and Ethereum are basically front-running the liquidity party. We've seen this before when the market sneaks out easier money. Risk assets like crypto go wild. But here's the thing, the rally isn't just about rate cuts. Yeah, the ETF inflows and macro optimism are huge, but there is also real demand building from institutions and long-term holders. So the difference from past cycles, this time if the Fed disappoints, we might not crash as hard because there's actual structural support. Still, if inflation stays sticky and Powell delays cuts, we could see a nasty pullback. So crypto is always the canary in the coal mine for liquidity. Thank you. Back to you.
Yeah, thanks, Rebecca. You made that very easy for me to understand. Like it was very plain sight, like typical supply demand, which drives the market. Yeah, so that's a strong point you make. Yeah, let's welcome Tuna. This question to you and a quick introduction about yourself. Oh, I think we lost Tuna. Tuna, are you here?
Sorry, I didn't hear the last question. Can you repeat, please?
Yeah, sure, of course. So this question is about the Fed hasn't even cut the rates yet, but the markets are already pricing in. You might have seen ETC topping 110K. And to what extent is this macro optimism fueling Bitcoin and Ethereum's rally? Do you think we are in the early stages of liquidity-driven bull market? So what's your take on this, Tuna?
Okay. The macro narrative absolutely plays a role, but this time it's not purely speculative liquidity. What we are seeing at the beginning of the structural rotation from traditional safe havens to digital ones like Bitcoin and tokenized real world assets. At Tuner, we worked in the RWA space, and what we are witness is the capital isn't just chasing yield, it's searching for trust and expensive rise with red calls on the high rollers and felt bad levers blowing in institutions are diversifying into digital assets with real-world backing. So yes, we believe this is only first of a liquidity lead ball, but one that's grounded in fundamentals and real-world integration, not just sentiment.
Okay, yeah, great summary, Tuna. So let's move on to the next question for today. This is on Bitcoin's all-time high. This time, Bitcoin's all-time high feels a bit different from 2021. Do you see a shift in who's driving the market this time? Is it institutions leading the charge, or is it the same FOMO, retail FOMOing back into the market? So this question, let me start with you, Julie.
Okay, sure, happy to jump in on that. Yeah, this is one definitely feels different. Like in 2021, it was pure chaos and Elon tweets, Dogecoins, and TikTok kids going all in, and it was peak retail FOMO. But for now, it's more calm and more structured, and this really feels like it's being led by institutions, and you can literally track the inflows into the spot ETFs and like BlackRock, Fidelity, etc. They are doing hundreds of millions in value in volume per day, and this and your average crypto bros and this Wall Street, and they are treating Bitcoins like a macro asset, a digital store of value, and maybe even a hedge against fiat instability. But retail is still here, just different. And they are smarter now. They are using tools. They are memeing, and they are more strategic. And they've been through a cycle, and they've seen the pain, and they are coming back with more convictions. And also something subtle but powerful. And there is way less noise that this time, no endless celebrity shows, less hype and more substance. And that's tell us this really is healthier. And so yeah, institutions leading, retail is watching and probably about to jump back in once things feel safe enough. And so that's all my thinking for that. And thank you.
Thank you, Julie. Yeah, with so much positive things happening around crypto, definitely FOMO is kicking back, and we're gonna see all-time high after all-time high hitting, and there's a price discovery coming up. Yeah, that was a good insight from you, Julie. Let me pass it on to the next panelist, Rebecca. So, what's your take on that?
Yes, so this all-time high feels way different from 2021. Back then, it was all like meme coins, leverage, and Robinhood traders. But now, it's institution quickly stacking Bitcoin through ETFs, while retail is still kind of on the sidelines. So don't get me wrong, retail FOMO will come, but right now, the big money is leading the charge. Just look at the numbers: billions flowing into ETFs, Bitcoin disappearing from exchanges, and derivative markets way calmer than 2021. So retail's not fully back yet. And honestly, I think that's a good thing. When your Uber driver starts shilling altcoins again, that's when you worry. That's my take. Thank you.
Yeah, that was simple and practical example, Rebecca. Thank you. So, what's your take on this, Jumpstart Panda?
Sure, thank you for the question. Well, I would definitely agree with Rebecca and Julie. Well, it's a new party, like mix of the big players and the retail, right? Right now, because like the big names, for example, BlackRock and other big hedge funds, right? They have set up the trading desks, like ETFs or custody services for non-crypto players, and they are moving billions in and out, which smooths out the rides and adds the serious muscles to the market. But on the other side, we are still got these retail traders glued to their screens, like chasing the next jump like euro, but they are no longer alone at this well. So I would say the market, or the price might swing less wild than 2021's, but every big inflow, well, from the bank or from the fund, can send new waves just as fast as we have experienced. Thank you.
Thank you. Yeah, that's a good insight for us. The same question to you, Tuna. So, what's your take on this? Bitcoin hitting all-time high, and whether it's institution or FOMO, retail FOMO.
Okay. It's definitely institution led like this time, and you can feel it across the board, from ETF follows to conversations we are having with traditional asset managers who now want on-chain exposure, not to meme coins, but to tokenized treasures, real estate, and inverse yield. Retail is returning to, but what's interesting is they are increasingly aware of value narratives, not just hype. More users are asking what's behind this token, what does it represent? That's where totally fits in. We're building the infrastructure to bring real assets onto China. So when retail doors come back in full force, they have more than memes to choose from. They all have they all have composable yield generating real world tokens.
Okay, so you say that institutions are running this rally, and possibly the retail as usual they're gonna FOMO in at the peak. Yeah. So yeah, like understanding all your points, I could say that the dynamics behind Bitcoin's all-time high recently, it's kind of noticeably different compared to 2021. Back then, as you guys said, the rally was largely fueled by retail investors with not much excitement from the institutions. And a lot of people FOMO'd in. Many people made money overnight, and a lot of people, as usual, they lost the money. We saw a surge in the number of on-chain activity. In contrast, the current rally appears to be much more institutionally driven, because you are not seeing like a single day prices hitting 20-30% and then moving around. So it's not happening this time. So it's a well driven, well calculated market, activity that's happening in crypto right now. Especially big players like hedge funds, HNIs, traditional banks, especially after the approval of spot Bitcoin ETFs in the US, has made it more easier for institutions to gain exposure to Bitcoin. And definitely, this has brought a lot of new level of legitimacy and the stability into the market. Yeah, so yeah, like institutions are currently running it, and we're going to see when people really FOMO in and take the market to the next level. Yeah. Okay. We have the last question for today. So this is about the combined market. On a bigger picture, Bitcoin is already at an all-time high. Ethereum leading the charge. Possibly it is going to hit the next all-time high for Ethereum too. Stable coins gaining legitimacy and rate cuts looming and US debt at record highs. So when all these forces collide, how should we interpret the crypto market's next move? Are we at the beginning of a structural planned bull run, or is it closer to a cyclical top for now? This question will start with you, Rebecca. So what's your take?
I think everything's hitting at once, like Bitcoin is breaking records and Ethereum finally waking up, and stablecoins getting legit, and the US drowning in debt. It feels like we're at the start of something bigger than just another crypto cycle. But here's how I see it: it isn't just a bull run; it's crypto growing up. Institutions are here, regulation slowly forming, and macro chains like debt and money printing are going away. That said, nothing goes up forever. We will get corrections, maybe even in a brutal one if the Fed messes up. But long term, the case for Bitcoin and Ethereum keeps getting stronger. Just don't get reckless. This isn't 2021. Thank you.
Okay, that's a very generic advice to the people. Like, don't FOMO in. So make smart move, make some money, don't lose it all. Yeah. How about you, Tuna? What's your take on this Bitcoin and Ethereum leading the market?
So, from our vantage point, this isn't a cyclical top, it's the early innings of a structural transition. What's happening now is not just price movement, it's a repricing of trust in the financial system. The rise of tokenized RWAs, stable coins, and on-time payment rails all point to one thing: crypto is becoming part of global financial infrastructure. Tuna's mission is to make this transition seamless by offering complete, modular RWA former works because when the next wave of users are arriving, they won't just want exposure to Bitcoin, they will want stable, transparent, asset-backed yield, and that's where we're coming. So yes, we are optimistic. The future isn't speculative, it's tokenized.
Okay, so you feel that future every asset traded on Earth will be tokenized and will be trading on it. Yeah, thanks both for your inputs on the questions that I've asked. Yeah, let me shoot out one very generic questions to panelists, like whoever feels comfortable, you can answer to us. So what's your take on the crypto in the next 5 years? So where do you think the market will be heading, and what's the market cap that you people are thinking that's a realistic market cap in next 5 years? So this question is open to every panelist. Whoever wants to answer, you can proceed to answer this question. So what's your take on the future? How about you, Julie?
Okay, and looking for the future, I think there are a lot of things we could we could realize, like for Bitcoins, like ETH, BTC and ETH, they will get more rise, like in a stable trend. And for the whole crypto market, I think it's getting stronger, and the whole trend for it, will divide. We will like to contribute more into the whole one. So just be a builder for it, and to stick to yourself. Just rely on what you believe, and yeah, yeah, that's all my hope and thinking for that. Thank you.
Thanks, Julie. That's a plain sight, solid explanation. What about you, Elsa? What's your take on the future of crypto and where the market is heading, the top typical market cap that you are expecting the market to it? Elsa? Okay, yeah, the same question to you, Gemstep. And what do you think about the future of crypto?
Hi, thank you, host. I would say the future crypto would be more, like a little bit more regulated, because like the U.S. want to join this play, and they definitely will be a, like a big role in this whole thing. So, I'll be, I mean, I tend to be more promising, instead of, like think the crypto, like we don't have the chance in the future to be, millionaire. For example, I mean, everyone in the market, right? I would say we still have the chance and see the new waves, but the rules might be a little bit changed, since the big players join. Yeah, that's my take. Thank you.
Thank you. What's your take on this, Tuna? Okay, so yeah, we got answers for all the questions we had today. Hope our audiences they got some insights in and around crypto and what's the latest take on that. Yeah, I really thank you so much to everyone who joined us today for this session of Neo Talks. We really had some fantastic questions and insights, and it's clear that the world of crypto is moving faster than ever. With big institutions, HNIs entering this space, definitely this is something we have to look out for in the future. A big thank you to our panelists for sharing their knowledge and to New Wave Academy for partnering with us. If you're looking to learn more about trading or with the Web3 space, don't forget to check them out. As we have seen, crypto is at a really interesting crossroads, whether it's becoming a new global finance force or just going through another big movement. We have to just wait and watch. Only the time will tell. What's certain is that these conversations with the experts help us all to stay informed and ready for what's going to happen next. Yeah, I thank again for being part of this CoinW family. Yeah, let's continue these sessions every week. And I wish everyone a wonderful day. And once again, thank you. Thank you so much for joining this panel. Thank you.
Thank you.
Thank you.
Thank you. Bye, everyone.
Bye.